Hello traders, hello everyone, my name is Gregor and welcome to our new video surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. So I'll look at the crude oil, dollar Mexican peso, 10-year US notes, dollar yen, S&P 500 and Aussie. Now let's take a look firstly on the crude oil. So as you know, situation between Russia and Ukraine is not getting better. Actually, it's becoming much worse. So that's why we are seeing energy prices higher. There's also OPEC on their latest meeting. They said that they will cut some production by November, I think. So this is certainly has a positive impact on energy prices, and on the other hand negative on the economy, especially in the Europe, who is trying to limit trying to put the cap on these energy prices to help the economies, especially through the winter. This will not be easy task from that point of view to bring the prices down. And if we look here also from an Elliott wave perspective, well, I think that this is a very nice deep free wave setback. Okay, and always when you see some reversals after this such a sharp and strong recovery like we have experienced from 2000 for the last 2 years, actually, always when you see a free wave setback, well, this should be potential indication that it's only a correction. Okay, of course, if this as long wave C is still potentially somewhere trading below the previous wave A levels, then of course this wave C could become even wave 3 at some point if we suddenly break much lower. But of course, because the previous trend was to the upside, okay, we definitely have to consider that this trend will resume, because there is always a greater probability that market will continue back towards the highs rather than make a top when you see these free wave retracements. So in my opinion, we have to be careful with more upside here. And if you look closely, even on the 4-hour, this is the chart that actually which tells me why we should be careful here. I was tracking this ending diagonal for a while, and was also highlighting this very nice trendline support. I didn't know back then if market will rally or no. I said that we have to see a confirmation that we are on the right track. And what we are seeing now, well, it's a very strong recovery. It looks like an impulse. So we broke this wedge pattern, we rallied above that wave for swing high. So I think that this recovery could see more upside towards 97, maybe even $100 per barrel to complete the first leg, an impulse from the lows. Okay, and then watch out for some pullbacks and even more upside. So looks like that we could be stepping here into this bullish phase. Also, we are now trying to break this 200 day moving average on the daily. We also, before that, we broke this 50 as well. So normally when you see the 50 broken, firstly was resistance here, and when you see such a massive move to the upside here, let me zoom this in. Okay, when you see this broken, then obviously this 50 could act as a very nice support. Okay, the first support is obviously now the 200. So I think that this could be indications that trend can be changing, even if just temporary. Just be aware of more upside, as I said, towards 100, maybe even slightly higher. So if crude oil will continue to the upside, then dollar CAD could potentially stop at these highs in the near term, maybe by the end of the week. But more importantly, I want to bring attention to Mexican peso, because if you consider how strong the US dollar is, and how this is also the case versus Aussie, versus pound, versus NOK, versus CAD, you can see all of them here. Some of them are inverted just to show you the very tight correlation. And if you now add to these markets dollar Mexican peso, well, what you can see, we can see a very sideways price action. In fact, we can see that since I'm comparing this data, it's actually since April of 2021 or so, what we see is that this market is actually sideways or even down. It's negative. So it means that Mexican peso is doing very well, much better than Aussie, pound, Kiwi versus the US dollar. So what happens if the US dollar at some point will hit resistance, which I believe will happen, let's say, by the end of the year. So if all of these markets would then turn to the downside, then this one could easily break the support. Okay, so if I see right now, what I see actually is CAD moving, dollar CAD moving into resistance. I see Aussie dollar moving into support. So maybe this, at least in the near term or just for a temporary period of time, we could see some recoveries on Aussie and CAD and Kiwi. And if that would be the case, Mexican peso, I believe, will break the supports. So that's, I'm fan of dollar Mexican peso here, because it's doing quite well while others are not. So what I'm tracking here is a very nice 5 waves down, as you can see from that pandemic high, and then you have just sideways a consolidation. This appears to be like a very nice triangle. We are testing this trend line. Actually, we are not there just yet, but 90.80, 70 around there, this could be potential breakdown point. Okay, so watch out for potential daily close, weekly close below that levels. If that happens, then I think that we are headed back here towards pandemic low. Now if you look closer here on these developments after a completion potential triangle here, notice that there was a very nice and strong drop here, and now it looks like that we could be dealing with some sideways consolidation. Okay, so that was a sharp fall, and now you are in a sideways pattern. So it looks like there is some intraday battles between bulls and bears, but eventually we should see, and we can expect lower prices as long as we are holding this 20.57 resistance as a potential high. Okay, so I think as long as we are below that level, I assume that we could see this breakdown, especially, of course, if crude oil will continue to the upside. Now, let's take a look on the 10-year US notes. Now, I've been tracking this one for a while. Looks like that we are here. If we zoom this out a little bit, you can see that we have a very nice 5 waves down from that high here, that swing high. You can see the waves 1, wave 2, and very nice extended structure for wave 3. Then you had a wave 4 rally, and now you're in wave 5. So this is a very, very nice clear Elliott wave pattern. But even when you are in a 5th wave, well, wave 5 is also a motif wave, meaning it should be structured by 5 subwaves. So Elliott waves are fractal, meaning that you will see similar patterns on different degree on different time frames. So what I'm looking at here is for another push to the downside into a 5th wave. Yes, I know that we are trading very close to potential support. Maybe some double low will someone look for, but I still think that there will be a slightly more weakness. We have FOMC meeting minutes that will be released today, and I think that we will not see anything new from the FOMC members. They will probably stick with the hawkish view and to fight inflation. They know that this could hurt the economy. Jobs are still fine, so in my opinion, this hawkish view will keep US yields bullish or US notes to the downside. So US dollar could still, in the near term, could still see some recovery. But I am aware that we are, as I said, we are still in the final stages of this 5th wave. So at some point, as I said, by the end of the year, I think that this trend could be reversed. Now, of course, when this happens, that's when gold, metals, other currencies could be very attractive. Now, what I want to look at today is also dollar yen. Now, US yields obviously are still on the rise. As I said, you can see here I have the US yields on the bottom, and here on the top I have dollar yen. There's a very tight correlation. I've been calling for higher dollar yen, especially since US yields broke this trend line resistance, and looks like that we are now rising, but still not trading at a new high here. So there is room for in the near term for US yields to hit a new high, and as I said, maybe the FOMC meeting minutes will be the catalyst here. At the same time, watch out for a wave 5 here to be maybe extended a little bit higher, maybe towards 147. Then you have 148, which is also very, very important level here. Okay, so that's the level from 1998, when was the latest Bank of Japan intervention. Actually, not the latest one was here. Okay, it was 2 weeks back. But since the market just made a temporary drop here and reversal to the downside, now we are back at the highs. There are already speculations that that there will be a new potential intervention. The only question is if they will be doing it by themselves, or maybe will other central banks join this intervention. But definitely 148 is a very important level. I think that they will again try to limit the upside. They're concerned about the Japanese yen. It has a very it's not good actually for their potential inflation. They are also importing a lot of crude oil, so this is something that we have to consider. So that's why they are trying to limit the weakness of their currencies. However, on the other hand, they have the easing policy, so there are some contrarian policies, which is the main reason why I think the dollar yen is back actually at the highs here and not continuing lower since the intervention. Okay, so let's take a look also now on the S&P 500. Now the S&P 500 is here breaking to the downside. You can see that we are trading at the new lows of 2022. Somehow this still could be wave 4. There is a invalidation level here at this swing high. Some would argue that maybe we should better look at the wave 1 swing high. So generally speaking, actually I don't care if this is a wave 4. The thing is that you are tracking a free wave drop. Of course, it can be maybe a wave 4 of some higher degree already in place, which will allow deeper pullback. So for me, the most important is to observe the intraday price action and trying to recognize when this wave C will come to an end. So far, unfortunately, that's not the case. So you have to respect potential deeper prices. Now here you can see wave A, here we have a wave B, and now wave C. Wave C, as we said plenty of times, it's a motive wave. Should be structured by 5 subwaves, and this is wave 1. You had a wave 2, you have a wave 4, wave 3, wave 4 rally, and looks like that we are now trying to break lower into wave 5 here. At the same time, we are already seeing VIX trying, the known as a fear index, trying to come higher into this extreme zone, but that's not the case yet. Definitely you want to see something more aggressive to the downside that will really bring on the fear around the market. So this is something that we have to see, maybe some just short-term capitulation on some single stocks before market will try to stabilize. Okay, that's something you want to see whenever you may say that yes, we are having a low in place, because that with this very strong spikes, you have very visible price pattern with a potential bottom, but unfortunately that's not the case yet. So looking here at the 4-hour chart, I see the wave 5 is in progress. There is a room for 3,400. You have supports at 3,475. So that's the area that we should focus on after any rallies. Very nice. Maybe some intraday resistance is around 3670, 60, around there. So watch out for this potential limited upside. If suddenly, let's say I'm wrong and we rally above 3885, that's the wave 1 here, right there. Okay, let me label this. Okay, and we can do it like that. Okay, so that's the invalidation level. Let's say that we rally here. Okay, if that would happen, well, then things, without seeing a printing a new low, then things will get a little bit more complicated. So in such case, I think that we could be dealing with a potential flat formation here. Okay, for a 3 waves down for a wave B, if we would rally here, and then I think that wave C could even see provide some more upside here towards the upper resistance area at 4,180, maybe for 4,300. That would be next resistance area. But overall, if we don't complete this 5-wave drop from that high, then I think that whole correction here for wave 4 unfortunately will still be ongoing, and that's why I said earlier that things will be a little bit more tricky to follow, because moves would not be directional anymore. Okay, now let's take a look on AUDUSD. So if let's say that that S&P 500 will print a new low and you see a 5th wave, then supports may not be so far away, or especially based in timing. I think that by the end of October, then we could see actually stocks trying to bottom. And at the same time, I would be then looking for for AUDUSD to trying to stabilize as well. Okay, keep in mind that on AUDUSD, I see prices coming out of a triangle, and now you are here in a wave 1, wave 2, wave 3, wave 4, and wave 5. So wave 5 could be dealing with, could be moving into potential supports. But looking at these triangle measurements, I took the widest lag here within a triangle and I projected from the breakout point. Okay, so that's the breakout point at 670, and I see projections around 6110. So around there, there's still room for more weakness. Even if I would, let's say, somehow adjust the wave count, okay, like that, and then maybe you are still here in a higher degree wave 3, and you will see rally in wave 4 and then continue down towards this target. So overall, that's still a downtrend, and I do not see any bottom just yet, but I'm aware of it. If we suddenly rally in 5 waves back above this resistance here around 6520, then I think that we would have a tradable low in place. So until that happens, just be very, very careful and be aware of more weakness. Traders, thank you very much for your attention. I hope that you enjoyed this video. If you do, if you want more videos in the future, please subscribe to this YouTube channel, or maybe just leave us a like or comment below the video. Thank you and bye.